everybody, this is Rob Keynes with the Freedom Report. I'm back with a longtime guest, John Lee, who's been an investor in the resource space for a very long time. He's been on our channel many times, and he's coming back today to talk about silver. We've had some historic times in silver. John, you've got a good read on it, having been executive in the silver space. Tell us what your read is on silver. Are we going to reach new all-time highs, or what do you think is the cause for the silver boom that we have right now?
Yeah, Rob, you just asked three questions in a row. I have been in the silver industry for 25 years.
Yeah.
And David Morgan and I, a good friend of mine, and I was scouring through all the in my early days about silver, read everything under Ted Butler, and worked closely with Bill Murphy, and Chris Powell. So it's a long time coming. It's long overdue. We're looking at taking off $50 imminently. I don't think there's going to be much of a fight to be put up.
Yeah.
There is a global reflation. I mean, the Nikkei went up 5% yesterday or the day before. I mean, Rob and I, you talk offline, it reinforces my belief that there are some actors that are not playing by the rules. Namely, they have one of those 14 magic printing machines that Elon Musk was referring to earlier this year while he was running Doge. And they are just printing on the, 50, $100 billion on a daily basis to gobble up all the different assets in terms of real estate, S&P, NASDAQ, to the point where they're owning around 80% of the global U.S. equity market. And they're now making a foray into international markets now, starting with the Nikkei, Taiwan, and other markets. So, and the reason that gold and silver has been going up nonstop, or particularly gold, since 2022, since the past of the pandemic, it's really got nothing to do with inflation. As I come on a couple of shows on different other hosts, and it's not to do with war, it's not to do with uncertainties, it's not to do with any financial crisis. It's really got to do with the billionaires and centi-billionaires trying to circumvent the micro mandates. They are being put in place as we speak. I don't know if some of your audience follow what's happening in Australia and in London. The digital ID and the central bank digital currency are being implemented, and UK and Australia is the first one to go, followed by first one to going live. I believe it would be sometime in 2026, and followed by the EU. That will be maybe 2027, and Canada is not far behind. And once the digital currency and the digital ID is rolled out, literally, if you jaywalk, the fine will just be deducted from your digital wallet. There's no repercussions. And if you do three times in a row jaywalking, then you can't transact anymore. And then there's also the notion of carbon credits to be married to that as part of the social system, and you'll be assigned about 1,000 kilos a year. And coincidentally, that is the amount of carbon you will consume for a trans-Pacific flight from Asia to America. That means that you'll be eating tofu for the rest of the year. So in a way, it's the well-to-do trying to preserve their living standards, because very soon, within the 18 months, it's going to be like Michelin's Club, members only. Even if you have money, you cannot buy steak. They're going to tell you what you can buy, where you can buy, and what you can buy, and they can even put it's called the programmable, so they can put an expiration date. They can tell you what to buy. It's like it's a coupon. It's really a coupon for the peasants, and the kings are playing by a different set of rules. That is the fundamental backdrop that's in place. Now let's talk about gold for a minute, Rob. There was a very clear cup and handle formation for gold with a neckline to 2000. And the first time was challenged, it was 2012 after the financial crisis. And the bottom of the neckline the bottom of the cup was about 1200. So the gap between the neckline and the bottom of the cup was 800. And that's why when the neckline of 1800 was taken out in early 2022, I have said that the short-term target for gold was 2800, because you literally flip that linear scale $800 to the other side. And then I said that on an optimistic log scale basis, you're looking at around 50% gain from 1200 to say 2000, and then so you tap a double from 1800 times 2 is about 3300. So when gold went to 2800, I said, you know what, it's kind of my target for 2023, 2024. And within months, it went from 2,800 to 3,300. It's like, okay, well, even the law scale, right? You've achieved that target. It's like, okay, the gold's going to take a breather at 3,300 and in early 2025. I say that that's all she wrote for the rest of the year. And then it stuck there for 6 months. It consolidated and broke out of 3,300. And I was on a show like 6 weeks ago. I say if gold to take out 3,800, then it's going to enter into that parabolic phase. And sure enough, we're at 4,000. So it's very clear to me that the guys are accumulating the physicals and in defiance of all the different matrix and ratios and gold to silver ratio, gold to oil ratio, gold to platinum ratio, gold to copper ratio. And they're just accumulating the metals and save it for a rainy day. That digital mandate is coming. And now, Rob, if I can just go to silver quickly.
Yep.
And I've asked you to pull up that silver chart. It's I would have thought that even at $2,000 gold, silver would have taken off $50 already. And the reason I said that was Rob, silver was first time at $50, gold was 800 in 1980, and then the second time silver went to $50 in 2011, 2012, and gold was at 1,500, 1,800. And now gold is at 4,000, yet the silver is still struggling to take off $50. And for two reasons, I think I come on your offline earlier. I talked about it. One is that China was going through what equivalent of U.S. financial crisis in 2011 for U.S. what China is going through in 2020. So that really dampened the speculative interest from Asians in silver. And then the other point is that everybody who wanted to get any silver was waiting for gold to correct, Rob. And I think the epiphany moment came in May of 2025 when the investor realized that gold is never going to go below 3,000, much less than 2,200. And everybody's waiting for gold at least go to 2,800, if not 2,200, if not 2,800. So they create the entry point for silver. Because as we talked about before, silver get whacked twice as much as gold when on a dollar update or on an equity correction. But equity correction didn't come, and gold correction didn't come, and the epiphany moment came in May of about 5 months ago. And that's why when there's clear rotation of gold money into silver money, and you're seeing days where dollars rally, gold got smashed, and yet silver was going up. And that's why I went on to Twitter and a couple of interviews and say that it's better to buy silver at 36 than buy silver at 34. And I packed the silver target of $50 in August. Granted, there's been a summer doldrums, so the cartels were able to manage the silver price. But now September came, boys came back from the Hamptons, and silver is the only game in town. So in terms of silver target, I'm looking at $85 silver in the next 3 to 6 months before PDAC, or at the latest, or at the worst, before next September. And the reason I said that is if you look at this chart, Rob, the first cup and handle breakout was in 2004, 20 years ago. The neckline for that was 750, and that was first reached in 1998, and then also in 2004. And the bottom of the cup was around $3. So if you flip that $3, 750 to the other side around a double, then you'll be looking at $12 to $15, depending on whether you look at the linear scale or the log scale. And sure enough, that's already got to. So now you can look at another very clear cup and handle formation starting with a neckline of $50, and you draw that 2012, and now we're challenging the neckline again at $50 in 2025. The bottom of the cup formation was around $12.50. You see that first in 2015 and also in 2020. So then, if you look at in terms of the linear scale, that would be a $37 gap, right? Flip to the other side of $50, so that would be an $85 target on a conservative basis. But on an optimistic scenario, then you're looking at 3x on the log. Say $15 times 3 would be $45. So then $50 times 3 would be $150.
Yep.
So coincidentally, even if gold is say at $4,000 and add a 30-to-1 gold to silver ratio, which is usually when the ratio bottoms at the peak of the metals blow off phase, you'd be looking at around $150 silver, even at a $4,000 gold at the $30 gold to silver ratio. So that is the extreme of which usually when silver peaks, what the ratio can get down to. So all in all, equity market is making all-time high. Copper's broken on all-time high. Gold's continuing marching forward in its own music, on its own element. And it is the best time for silver. And once silver takes out $50, which I believe will happen imminently, you're looking at silver go to $85 in a hurry. And after that is really anybody's game. We have no idea where that's going.
Yeah, I agree. And I've been showing the difference between the logarithmic and this is the log scale. And on the log scale, what it does essentially for those non-math nerds is it does it proportionally, meaning if you just do a linear scale, you're just looking at prices, but you're not looking at inflation and you're not really measuring the time value of an asset. So on the arithmetic scale, you can see the big 50-year cup and handle, that eventually will break out to the upside. But if you look at logarithmic, you can tell that the breakout hasn't been as pronounced as people think. So what the log scale does is it shows you proportion and it shows you time value of the asset, meaning that the breakout's going to be higher when it comes on the log scale, because the log scale is really showing you 2025 versus 1999 numbers.
Right.
And I wanted to see, John, if you could comment on, I'm going to come off the chart for a minute. If you can comment on the gold to silver ratio. Gold has popped in the last year, is doubled in the last year and a half, 2 years. Silver and reached consecutive new all-time highs, like 4,000 yesterday on the futures for the first time in history. And so, like you said, gold's running, it ain't stopping for reasons in which you stated. That was a very good analysis. Silver has not really popped its all-time high of 50, and even if it does, even at 4,000 to 50, that gold to silver ratio is distorted when you look at mining output or traditional measures of like monetary value or even physical value being pulled out of the earth. And given the industrial demand for silver, what do you think could happen to that gold to silver ratio ultimately? Are we going to revert back to where silver now runs more than gold at this stage in the metals bull market?
Silver will outrun gold,
Mhm.
starting from here.
Mhm.
You touch on a couple points. I like silver a lot better than gold at this point because silver is what I call the greed metal, whereas gold is the fear metal. And as you've seen equity are breaking out, cryptos are trading 100,000. So there is that speculative element coming into the equation.
Mhm.
And the global economy is trying to reflate. Interest rates in the United States and Canada and in Asia are trading down. So all these are very favorable environment for silver to pop. At a 4,000 gold and $50 silver, the ratio is 80. That's actually on the high side. So certainly it doesn't show any froth in speculative interest for silver. You and I talked about it a little bit. The reason silver is a lagger, it's really not to do with much about investment on industrial demand, but it's all about investment demand. As silver prices go up, the industrial demand would taper as industrial users look for substitute, whereas investment demand will go up because people buy more as they make more money. And the reason silver was laggers, I just talked about 15 minutes ago. One is China, it's gone through, it was wreaking havoc with the financial crisis and struggled to come out of the COVID recovery. And then the other one was that the silver bugs are waiting for gold to correct, which never happened. And also that silver's audience is very different from gold. I mean, gold is what, 10, 20 trillion dollar market, but silver is a 300 million ounces times, so it's a $15 billion market. I don't believe, I studied quite a bit about above ground available inventory. I don't think there's a billion ounces of silver to be had if
Nope.
somebody were to plunge down, say
Nope.
a $50 billion out there. I don't think there's even gonna, I just struggle to come up 300 million ounces even without some hardcore recycling. But $50, I mean, just recycling costs is also quite prohibitive. But going forward, as silver prices continue to ramp up, it's going to create a bigger audience. As I mentioned to you, the guys that are buying gold are the Jeff Bezos, the Koch brothers, Zeras, the Saudis, and at a $15 billion annual investment supply for silver, it's not enough to accommodate the appetite of one billionaire. And so therefore, as silver prices continue to go up, you're going to see more algo funds, more unidirectional hedge funds, and bigger family office and holdings of $50-100 billion range started to tap into silver. And so that's quite exciting. And nobody really has a crystal ball of what happens, because the last two occasions when silver took out $50, it was there for a couple of weeks and then came straight back down. So, but given that we're not seeing gold toppy yet. You're not seeing like $100 day movement for gold, and you're not. And then today in silver, you're not seeing like a $2 day for silver. I think that when that happens will be the first indicator for toppy for silver. And you and I talked offline a little bit. I think another good indicator for seeing silver reaching a short-term climax. Short-term climax would be when the industrial users flip the chapter and become an aggressive buyer, right, to try to secure their critical supply. So if you see the headlines of Apple trying to buy up silver for electronics, or the TSMCs, or the solar farms like Tesla scrambling for silver and looking into tapping the silver futures market, trying to ensure their supply. So that would be maybe an indicator of signs for top for silver. And just in thinking out further, Rob, there's going to be some sort of resolution to this digital mandate for the market to top, because this is not about one-time thing like somebody launched a rocket, right? Or there's some supply bottleneck, or there's it's not like it's. I don't think it even matters if Jay Powell would start jacking up interest rates. See, the dollar's gone up almost 1.5% in the last 2 days. But that didn't, and silver was corrected down to 2%, but yeah, it bounced right back up. So I don't think so. I think silver and gold is going to continue to go up, irrespective of the action of the equity market, irrespective of the direction of the dollar or the interest rates or the economies. It's going to be some sort of resolution on these digital mandate on this CBDC and carbon credits, and then see how things are going to roll out. And while I'm talking to you, Rob, I'm quite optimistic because the rollout of the digital ID and CBDC seem a little bit uncoordinated, seem a bit hazy.
Very much.
Because I mean, sure enough, it's not like COVID where they had planned it from China to Italy to US, and it was all staged. It's the same storyline repeats. But the digital rollout, it seemed like if they're going to go so drastic, and then without sort of well planned on the global level. I mean, sure enough, right? The countries are the U.S. or all the other sort of neutral countries or Eastern Europeans. Look at what's happening. They're going to be quite. I don't think it's as well programmed in looking at it as maybe they would have liked, and maybe they got some very aggressive timeline targets that they have to meet. So that's see. I just want to also preface quickly. I know we're sort of we got about 15 minutes. Is gentlemen, Rob, I remember I was in Brazil during the 1997 financial crisis. It is a wake up call, Rob. You want to buy gold and silver, as I was on the show 3 years ago. Like my mom, my family started buying gold at 1800, and silver at $35. It's the time to get in. This is not some hearsay, Rob. Like, there is warning signs on the wall. Like, I was in Brazil. They think these people are thinking, oh, it's okay. Time's gonna kind of pass. Everything will be okay. Well, what happened then was in Brazil in 1998. There's a lot of people that saved their money in dollar saving in their bank in Brazil, in Argentina. And then what happens is that once they were trading at parity, say $1 to the real or $1 to the Argentine peso, on a Friday, the banks and central banks in these countries will shut the bank down and shut your account, and then float the currency from, say, 1 real to $1 to 5 real to $1. But before they do that, they will convert all your dollars to real, and they will float it. So overnight, and then if you were to try to convert your real back to the dollar, you would have lost 80% of your money, Rob. This is not some hearsay. If you'd have waited, if you'd have kept your money in the bank and allow the central bankers to convert all your money into central bank digital currency, and you're thinking, well, I transact digitally anyway, it doesn't make a difference. You're not going to be able to take that money out of your bank account. You will not be able to withdraw cash for more than $1,000 from your local branch. You will not be able to go to Kitco and buy gold and silver. You will be struggling to go to Morton's or Ruth Chris, or take that vacation to Positano, or go to Safari South Africa. So heed the warning signs before it's too late. You gotta circulate. You gotta get the money out of your money, hard-earned money out of the system, and start buying gold and silver. This is a stern wake-up call. I really hope that your audience heed to that. There's still time, but not much left.
Yeah, you're speaking my language. I've been talking about this for a long time, and you see, I was in tech for 27 years, John, and I worked on 5G for Verizon and I worked on a lot of projects and I saw, and I just wrote an article on this on my Substack. I saw the development of things that could be used in the United States potentially as digital control, even though I think when we were rolling that stuff out, it was really about meeting market demands. I mean, 5G is a wonderful technology in which people can have access to the internet, even in rural areas and things like that. And it provides better connectivity. Certainly people wanted that. But on the flip side of that, if the state is get control, some of these things can be used against us in order to control. And we've seen that throughout history. So it's not really a conspiracy theory. It's just a pattern of things that have happened over history. And I agree with you that we need to be very cognizant of that. And I appreciate you being willing to talk about that on the program. And that's one of the reasons I have you on here is because you're a very good market analyst, but you also see what's going on around the world
Well,
and you've
there's
been around the
11,000
world.
people getting arrested in the UK
Yeah.
versus say 2,000 in Russia. So if
Yeah.
you say something bad, if you wave the wrong flag, or say the wrong thing, or have the wrong placard on the street, no, they don't even need to show up your front door with the facial recognition. They just flip of the switch, and you are taken off. You're taken off like the Matrix. You are
Yeah.
plugged off, and you cannot pay. You cannot pay taxes. You cannot go to see a doctor. You cannot claim your benefits, and your home's will be foreclosed. You can't even buy anything. It is a pretty dim scenario, but there's always a way out. So I highly recommend you guys go to Twitter and YouTube and check out some of this what's happening in UK and Australia.
Yeah. Now let's get back to some of the projects that you analyze. Obviously, you've been executive in the space. You've been in not only gold, silver space, but commodities for a long time. There are certain commodities which are very important to industry. I think you have another one that we're going to talk about here. Talk to us about what you see in the commodity space and what you're interested in here, John, beyond gold and silver, opportunities for people to get involved in things that are going to be critical really to industry going forward.
You're right. I am not so bullish on the energy sector and
Mhm.
also on base metals. I think there's already outright collapse of the global population. I don't think China is even have more than $500 million. I was in Japan. I don't think they have 100 million people. I don't even think they have 35 million people. There is a collapse of the global economy, and that would dampen the industrial demand base metals. In
Yes.
terms of energy sector, I'm not bullish. I'm not bullish of oil. I've been saying I'm quite bearish. And if you look at oil from inflationary adjusted basis at $60, like equivalent to $10 oil from the 1970s. And the reason is solar and some of these other innovative technologies really going to lower the cost of energy production in the long run. However, I am very bullish on some of these critical minerals. As the periodic table, as technology advances, you're going to find some of the uses of these critical minerals that once have forgotten. And so it has an about face. And one of them in particular is fluorspar, which is fluorine, and something that I've been studying the last 12 months alongside silver. And in short, Rob, it is a very special situation. That's why I come on your show to share with this audience a very exciting story. Fluorspar, is the native form for fluorine. The price has gone up more than fivefold since year 2000. It's gone up 50% in the last 3 years when China turned into a net importer instead of being an exporter of fluorspar. And the reason for that is that because China has been churning out also EV cars, of which fluorspar is required for these batteries as a form of electrolyte. So, Rob, you talked about the anode, which is graphite, and cathode is transition metals like cobalt, manganese, and nickel, and now iron. But people don't talk about electrolyte, of which the ions, the lithium and sodiums, are swimming across carrying the charge between anode and cathode, and that's where fluorine comes in. Every lithium requires 6 fluorine atoms in these energy storage, in these EV batteries, or in these solar farms with energy storage. So China's been churning out those electric vehicles, and now China's consuming 7 million tons of fluorspar a year. So China is running out of fluorspar. They got less than 5 years of fluorspar left in their reserves, whereas they have 50 years of fluorspar in rare earth in reserve in China. And United States today consumes about 400,000 tons of fluorspar for EV batteries and also for uranium enrichment. So if you talk about enriching uranium for nuclear power plants or for nuclear submarines or for weaponry, the uranium is enriched through gasifications of the uranium oxide into uranium hexafluoride, and from there, the centrifuge action would then spin out the U-235, which is the fissile uranium for nuclear reaction. So every uranium requires 6 fluorine atoms to gasify and for enrichment. So these two elements account for over half of the fluorine usage. And then there's other like semiconductors, fluxing agent for aluminum and for steel. And what we're looking at, Rob, is very much like rare earth. This MP Materials is $10 billion market cap. The project in California has been recycled twice out of bankruptcy. Now it's $10 billion. All the uranium mining companies, there's about a dozen or so. They're trading at between $500 million to $10 billion range. And yet there's only 2 fluorspar mining companies listed on North American Stock Exchange, and CleanTech CTV being one of them. And that is the company of which I'm the CEO, of which the company has gone from $3 million market cap to now we're trading at about $30 million. But still a fraction of it could go where it could be, using the lithium companies, the antimony companies, and the uranium companies and rare earth companies as a guide to where it could be. Once the DoD, the DOE, and the U.S. federal government realize the importance and criticality of fluorine in making the world go around, and such a strategic element for all the initiatives that the United States is pursuing.
Yeah, I agree with you. And your project here, talk a little bit about your project here, where it is in the United States, and why its location is important in addition to the quality of the project.
Right. The United States today does not produce fluorspar, entirely rely on the import from Mexico and China, of which China has stopped. So Mexico produces 1 million tons of fluorspar, which is 10% of the global production of 10 million tons. And then the world is relying on Mexico to supply. So for U.S. to become energy independent, semiconductor independent, steel, aluminum independent, it's going to need 4 times as much more fluorspar as it's consuming today, which is 500,000 tons. So that would translate to 4 million tons of demand. Mathematically, just not possible. Now, in answer to your questions, Rob, CleanTech's project acquisitions was made for them. One, again, just this morning, is in this Kentucky, Illinois fluorspar district. It's called the IKFD. That's where 90% of the fluorspar production came from. The peak of the production was actually in World War II, when fluorspar was churning out of the ground in this region to accelerate weaponry production for steel and for aluminum. Production stopped in the early 90s when China flooded the market. But as I mentioned, the chapter has been turned upside down. And now China is competing with the rest of the world in securing additional fluorspar supplies for themselves. And that's why I believe the wake-up call is going to come very, very soon. When people come knocking on the door of the Mexicans, and Mexicans say, no mas, there's nothing more to give. And this region produced over 30 million tons of fluorspar. Currently, there's no more fluorspar coming out of the region. But in the last 2 months, CleanTech managed to amass 20 distinct different deposits with over 740 drill holes and about 10 million tons of historical resource. Granted, Rob, as your audience know, historical resources are calculated different ways, different standards, and so all these resources need to be brought current. But we feel pretty comfortable with that number, given the number of drill holes that's been put in the ground. So our goal, and now having just secured these land holdings, and already placed CleanTech as one of the largest major fluorspar player in the district in the United States, we'll be looking to fast track one of our projects into production. So I think the audience and some of our existing shareholders could be looking at a number of news releases to come in the next 6 to 9 months as we laid out the strategies to accelerate the project into production.
Yeah, very good. So last part of the conversation, any other slides you want to talk about, or any ending comments you want to talk about fluorspar? Let's go look at the stock chart real quick. Talk to us about the stock. Talk to us about where you think that's going. What advantage this would be to investors?
Right, Rob. Go back to your saying. One of the things you know about that area is the fluorspar is highly associated geologically, mineralization wise, to rare earth. So little do people know that the largest rare earth project in the United States is called Higgsstone. Actually reside in this area. You can see the Higgsstone right in the map. So we actually already secured the western circumference of Higstone project in its red dots just a month ago in August. And on the eastern part of that Higstone project is mostly being mined out. That's where the historical
Hmm.
fluorspar production came from. So we're doing some sampling, working with the Kentucky Geological Survey and the Illinois Geological Survey to conduct some sampling program surrounding this Higstone project. And so we'll not be surprised to see some germanium, gallium, and some of the heavy rare earth elements being discovered, and that would be a game changer. In addition to, it would be like an icing on the cake. In addition to the fluorspar resources that we already have, and also that there is galena and sphaerolite in this region, so there's well documented historical production of zinc, lead, and silver as well. So this is really a treasure trove. And this is what I call, for gold investors, the Carlin, Nevada equivalent for fluorspar and exotic trace elements. So like I said, we are extremely fortunate to have gotten where we are. In terms of stock charts, even though the stock had to run up, but the first sort of the first uptick in a rally when the company went IPO 4 years ago at $100 million market cap was based on its nickel project and the vanadium project. But the nickel
Hmm.
project has since then been sold in late 2024, and then we have taken that proceeds to stake and acquire the fluorspar project. The first one was announced in July. That's why you saw that there's a big volume uptick in July, and that
Hmm.
was all the nickel guys throwing their towel, and then the fluorspar guys started coming in. Over 50 million shares have changed hands, and out of the 80 million shares floating in the market, and of that 100 total shares outstanding is 140 million shares. Half of the shares outstanding are held by insiders, and these are Silver Elephant shareholders when the company was spun out 3 years ago. So you have a very tight share structure. The insiders continue to buy in the market. We still got about $1 million in the bank, and there's no imminent financing in the horizon. And we'll continue to get the story out. And there's a big accumulation from current shareholders. Very, very exciting story going forward. 6 months ago, 2 months ago, I was on the program when we announced the first fluorspar acquisition at 3 cents. I said, this is the best opportunity I've seen in my 25 years career. You know, century long mineral rights in the United States, critical minerals, 740 drill holes, no debt, cash in the bank, excellent share structure. It couldn't get better. I came out on the limb and say it's going to be a 10 bagger. I don't think maybe a 10 bagger anymore, but certainly still has magnitudes of upside to come in the
All
near
right.
future.
Thank you, John, for joining the program. We're going to have you on again. We're going to do another visit here probably next couple of weeks to month. We'll see how it goes. Thank you, John, so much for joining the program again with your analysis on gold, silver, and bringing to our audience another interesting project. Happy to have you back on the program, and we'll talk to you again soon.
Thank you very much, Rob.
All right, we got it. It's going to stop recording here any minute. Appreciate you, John. I'm going to get this out quick. I'm not going to wait till Monday, so we'll pop it out tomorrow.
Yeah, if you put the traded ticker symbol CTV, CTVFF over the OTC